Good afternoon, everybody. Yes, I was late. Had a work call come in, even on my day off. Have to deal with something, so we'll see what happens. Wanted to go live and discuss what's going on in the market right now. Sure, everybody's feeling a little bit of pain. So right now, markets are actually coming back a little bit. Nasdaq's down 350, Dow's down around 386. I mean, look, I'm not going to say the three famous words that I normally say because you know what? May put some people in a bad mood, but let's go over a few things. So, this morning, we got what is considered a grim private jobs report. And of course, I actually have to take this. Give me a couple minutes. Hold on. All right, I'm back. I am going to have to send an email once something comes in, so may have to halt for a minute or two in a little bit. Even when you take a day off, there are still fires that need to be put out. So, apologize for that. All right, so basically, the smart money is running for safety, it looks like. I don't really buy that, but a lot of people supposedly are piling into 10-year treasuries because they're worried that the Fed is going to have to cut more because of the jobs report that just came out. And wouldn't be the first time that this happened. US-based employers announced 153,000 and change in job cuts in October 2025, which was the highest total since 2003 in the month of October. And this is a sharp uptick of roughly 100,000 since September. So a lot of layoffs occurred in warehousing, tech, food, and government. So basically, people are worried this is going to continue, that this is going to cause the Fed to get more aggressive in rate cuts. And they're trying to lock in that 4% and above yield on the 30-year. And the bond market is going a little crazy right now. So, Dookie Pie, thank you so much. I can't believe you're back again. Truly appreciate it. Can't thank you enough for last night. Really, really great. So, look, this caused a lot of stir, and the government shutdown's not helping. Over 30 days, it's interesting. But once again, this is why long-term investors have a long-term mindset. And days like this, when stocks like Palantir are down, Palantir's starting to come back a little bit. I mean, look, Palantir was down to 175. It's at 178. We have other ones like Hood that are down $10. Even Meta's taking a hit. Meta's down 2%. NVIDIA is down almost 3%. There was some news about NVIDIA. SoFi's down 6%. But once again, look, investing on a day-to-day basis can drive you mad. Investing on a week-to-week basis can drive you mad. Over the long term, the real question is, did anything that happened today break the long-term thesis? For me, no. And this becomes a situation where you have to think long-term. Now, I will say, the one fear that I've had has been unemployment. We don't have the September numbers for unemployment. The last numbers that we have are August, and it was at 4.3%. So my thesis on this has been, if AI and robotics expand aggressively without the Fed cutting, it could create a situation where unemployment rises and we head into a recession in the second half of 2026. So maybe this happens, maybe this doesn't. I don't know, but there's a lot of things going on today. And I actually have not been watching. I pulled a bunch of videos that I want to watch with everybody and discuss, because there's a lot of interesting stuff, from the Tesla annual meeting to David Sachs coming out with some commentary, and Google chip stuff, and then Kramer saying stop trading Apple. I mean, I've been on that bandwagon for a while. So at the end of the day, it's too early to know what is going to happen. But in the long term, volatility traditionally reverses. Could this happen for a long time? Sure. We'll see what happens. So let's start with Google. So let me share this. This should be interesting. Not making the rookie mistake of not turning the audio on.
Today announcing it's rolling out an in-house AI chip that it says is the most powerful and energy efficient yet, as the tech giant takes aim at NVIDIA. Our Mackenzie Sagalos is digging into that for today's Tech Check. Morning, Mac.
Hey, good morning, Carl. So Google, it is opening access to its most powerful AI chip yet. It's called Ironwood, and as it leans harder into custom silicone, it is very much becoming a core part of its cloud strategy. Now, the chip was introduced in April for internal testing, but is now moving into broad availability, and this is key because cloud wars, they have officially become chip wars, and if you don't have your own silicon, you are already playing from behind. Now, Amazon has Trainium, Microsoft has Maya, but analysts say Google's in-house chips have an edge on the competition, part of why they've been winning business from rivals. Just in the last few months, Google has landed cloud contracts with OpenAI, Meta, and Anthropic. Now, Mizuho points to the distinct cost and performance advantage of TPUs. And Alphabet CEO Sundar Pichai said as much on last week's earnings call, bragging that TPUs have been one of the biggest drivers of cloud growth over the past year, and that demand is only accelerating, which is why Google's investing heavily to scale. The optics help too. TPUs are the hardware behind Gemini, Google's in-house AI model, which has gained major traction this year. It now powers everything from Android to search, and reportedly just landed the prized Apple deal to run Siri's upcoming AI upgrade. Now, for months, the big question was whether OpenAI or Anthropic would win that business, and now it looks like Google did. And with Google Cloud revenue up 34% in Q3 and $93 billion in CapEx planned for the year, the company's betting big that in order to win in AI, you have to control the full stack, and that starts with your own chips. Guys?
Mac, any ideas on what kinds of features we might get out of Siri as a result of this Google partnership?
I think that people are looking for any sort of upside in Apple's AI strategy because to this point, 10 years ago, they had the advantage in the voice assistant market. Amazon and Apple were leading there, but it's been a real disappointment since then. So you've seen this, imminent upgrade teased, and year after year, they keep pushing it back. And I think that, to your point, Carl, we haven't been able to confirm that Google is their partner, but people just want to see something more because at this point, the tech is so nascent compared to the likes of what we're getting from, live conversations from ChatGPT or from a lot of the deployments we've seen with Gemini. But I think that looking at some of the capabilities that Gemini has rolled out in the last few months, including their video generation capabilities, there are high expectations if Gemini is indeed the partner for this Siri upgrade.
Right. It is interesting, too, to watch Google in this case, but also Broadcom, clearly AMD, at least do their best to nip at NVIDIA's heels.
Yeah, they're certainly trying. And you've got Lisa Su, the AMD CEO, saying during their earnings call this week that they're finally expecting to see some revenue from the China pipeline reopening. They've been able to land their export licenses. And then you've got this, back and forth from NVIDIA just today. Jensen Huang reportedly telling the FT that China's now ahead in the AI race. And then you've got NVIDIA putting out a message on social media contradicting that, saying that, the U.S. is still a few nanoseconds ahead of China. But it does beg this larger question. They need to get this competitive silicon into other global markets, specifically China. And while there's been this blockade, you know what the Chinese government has been doing? They have been really pushing domestic homegrown AI chips from the likes of Huawei.
Yeah. They're marching ahead, too. Thank you, Mackenzie Sagalas.
So, very interesting. And I agree with them that companies are going to need to own the entire stack in order to truly be vertically integrated and win. Alphabet right now is that company. When you think about the companies that are playing in this, you can make an argument that Amazon is also, but at the end of the day, Amazon didn't build a true LLM the way that OpenAI or Alphabet did. Rufus is more on the e-commerce side. So I do think that Alphabet is in a great position here. And once again, the job report today, the government shutdown, people moving into treasuries, does that really impact Alphabet? To me, I don't think so. Think about how Alphabet makes their money. They have services, which people are paying for additional cloud space. They have Android. They have YouTube. They have cloud. I don't think anything that happened today causes people to get out of these businesses. In fact, we saw the backlog for their cloud be extremely aggressive. So days like today are not doom and gloom to me. They're just retracements and opportunities for long-term investors. So I'm really not worried about today. It's just short-term jitters. And the flip side of the Fed cutting rates quicker is that you have 7.5 trillion sitting in money market accounts, and that's not solidified with the yield. That fluctuates. Some of that capital can come back into the market. And look, this is healthy in a market. Markets just don't go up. We all want to see a bigger number when we log into our accounts. But at the end of the day, this is healthy. And does this change anything for 5, 6, 7 months? Probably not. So I'm not terribly worried about this. Now, Tesla is probably something that's been on everybody's minds. I have my own take on this. I'm going to be, well, before we do that, let's do Tesla. So let's see what they are expecting. This just came out. I haven't watched it. Let's react to this together.
Tesla, the company holding its shareholder meeting this afternoon. At stake today, as shareholders will vote to approve Elon Musk's $1 trillion pay package, potential pay package. Got to say that. Tesla shares pulling back more than 4%. Bryn, you own this one. Your view on the vote, the pay package, everything else.
Well, I think this is where the retail investor has been just very influential in voicing their support of management. And I think with Sawyer Merritt, who talked about Schwab, putting a lot of pressure on big companies that actually have more meaningful exposure to say, hey, this is a good package, vote with management. So it seems the betting market says this is going to clear. I think it's a very positive clearing event. And I mean, we've talked about it a bunch, but once again, for him to get this, it's a 10-year deal, just like basic, simple one thing that has to happen. The stock has to have an $8.5 trillion market cap. So it's at what, 1.3 right now? So there's so many different levers. I think it will pass. It'll be a good clearing event, and we can get back to the business of actually the business of Tesla versus this proxy vote.
All right, that meeting starts at 4 p.m. Eastern time. I want to turn to Datadog, giving some very strong outlook, Joe. Stocks moving higher right now. Your view?
Billings up 30%, revenue up 28%, cloud-based monitoring. They have an agreement with OpenAI. They have a relationship with AWS. Obviously, you're being rewarded here if you're long. If you are long, I'd use a 165 stop. Otherwise, on a day when it's up 20%, I don't think you want to chase it.
All right, there you go. Going to move on to CarMax. Lower on a week outlook. Also, the CEO exiting. Jenny, you own this one.
Yeah, so actually, we just sold it. Like, just, a few minutes ago, it's all gone. We sold it at 35.20.
Like during the show?
They sold it in the office. Oh. I don't know if it was at like 11:30 or noon or whenever, but it was just sold. So we sold it at 35.20. The investment thesis is broken. And what we're worried about here, which goes back to me saying over and over, I am worried about the consumer. So once you disaggregate, the lower end consumer buys used cars. And they're saying that the November quarter should be down 8 to 12%. We don't think the used car market is probably that weak, which makes us think that they're pulling back on financing because they're having problems with loans. We've all seen the auto loan delinquencies are increasing, especially with the lower end consumer. So we're worried here. We think there's problems that we can't even begin to figure out at this point, and sold the stock.
All right, one more. We got Costco maintained to outperform over at Telsey. Jason, you own this one.
Yeah, Costco has been a tough story, obviously, this year. It hasn't traded well.
Costco. I mean, they have such a low margin. I don't understand how they're getting this valuation. I mean, if we go into a recession, I think that, or I'm not going to say the inflation word, but if things get more difficult, I think that their margins can get compressed. I really do.
It's flat for the year. Operating income in the last quarter was up almost 20%. Membership rate, renewal rates around 90%. EPS was up around 11%. What I always say too about Costco, they've managed inflationary costs well, and I think as it relates to their private label brand, Kirkland, it's an $80 billion business, which is almost a double to Coca-Cola, $47 billion in revenue for the entire company. So they've done a great job. New CFO there, but it's just the market doesn't like it so far this year. Great year last year, though.
Shares of Costco pulling back about 2%.
Yeah, I love the company. I love the business. I'm not a fan of Costco. I'm really not as a stock investment. I mean, that's just my opinion. I'm not a professional investor. I'm not a financial advisor. Take what I say with a grain of salt, but a company that is doing 275 billion in revenue and their net income is 8 billion. I mean, that's around a 3% profit margin. I mean, that's not a business that's fortified. So I also think that Amazon can come in and really put some pressure on them if they go big box. They already have a superior logistical network to everybody. So we'll see what happens. I mean, as far as Tesla, I mean, do we really think that Elon's not getting his pay package today? So they're expected to disclose the results of the vote. I mean, look, Musk is going to get the pay package. I can't see that he doesn't. So where do we go from there? I don't know. Maybe he gets fully engaged again and he really becomes incentivized. To me, I thought that the price targets from ARK were a little crazy, only because so much of their thesis revolved around a robotaxi. And to me, the value in Tesla is Optimus, not robotaxi. And I've been banging this drum for a little bit. The idea that every single person is going to allow their car to be entered into a robotaxi platform is crazy. Personally, if I was to buy a Tesla, and I will buy a Tesla when it can drive me around and I can sleep, at that point, sure, more people will probably buy it. But I'll never allow my car to be in a robotaxi platform. God forbid, there's just too many questions. Well, one, I don't want anybody else in my vehicle. Two, God forbid it gets into an accident. Whose fault is it? I'm not driving. I'm not even in the car. It's just the law of large numbers. The more time on the road, more chance of an accident happening. And three, I think that people are very mistaken about how many people will actually enter it into the marketplace. Now, that's not to say people won't go buy 10 Teslas and try to create a business out of it. But at the same time, you still have Uber to compete with. And Uber's already got the logistical network from an e-commerce business. They already have the app built out. They already have the accounts. Why would somebody move from the Uber platform to downloading another app and getting a robotaxi from Tesla? I don't know the answer to that, especially since you have to think that Uber's going to have autonomous driving on their platform also. So I don't think that this is a battle that is going to generate the types of profitability a lot of people think it will. To me, Optimus is the big one because Optimus solves so many things. Think about it. For aging humans, such as my parents, they're going to have an Optimus bot as soon as they can get one, because I don't want them having to carry things in and out of the house. I don't want them to have to do the laundry, go up and down stairs to do things. So Optimus bot is going to do a lot of things for society. I really think that we are going to see a situation where they become standard, not just in businesses, but households, especially at the price point. Elon's talking about $20,000 to $24,000 for an Optimus bot. He said probably $22,000 or so. When you think about it, you think about what a car costs these days, and you're going to be able to finance this over 5 years. I am really thinking that this is going to be the way of the future, and they can sell a ton of them. In addition, here's the other thing with Optimus. They'll probably have a $40 package or something like that because it has to be hooked up to the network to continuously learn. So it's not just that they're selling you the bot. They're probably going to be generating reoccurring revenue from it off of every bot, being hooked up to a neural network where every time an Optimus bot performs a task, it then learns and gets infinitely better every second of every day. And who wouldn't want an Optimus robot or a robot from Figure or a robot from one of these other companies that can do the dishes, that can unload and load the dishwasher, that can do the laundry, fold the laundry, cut the grass, and just do all the regular chores that take time out of the day. To me, that's a huge win-win. And I think that that is the way that Tesla is really going to scale. Also, I am also not convinced that people are going to get rid of their vehicles to simply rely on a robotaxi network. Even at $1 a mile, I've done the math on it. It doesn't work out. Simple math. If the average person drives 20 miles each way to work, that's 40 miles a day. Okay? 40 miles a day times 30 days a month to make the math easy, $1,200 a month. Right there. That doesn't include grocery store. That doesn't include going anywhere else. That's to and from work. I don't see how this gets to a place where it is cheaper than owning a car. I'm just not on it. I'm more on the Optimus platform, and I think that that's the real big thing that is going to drive Tesla stock higher. So let's see what Faber has to say about the expectations on disclosing the results. I'm wondering where they're leaning toward with where this is going to go. I mean, do we really think that he's not going to get the pay package? I think he is.
Tesla is holding its annual meeting today. A key focus, of course, will be the results of that shareholder vote on Elon Musk's potentially trillion-dollar pay package. Phil LeBeau, of course, watching this closely, as are all shareholders here, Phil, given Musk has said if he doesn't get this comp plan, he may be out the door.
Yeah, and I don't think most people believe that's going to happen, David. And look, when you talk with most people, they believe ultimately this is going to be worked out. And look, we usually, and you pointed this out last hour, usually you get a pretty good sense of how shareholder votes are going to happen. Tesla's keeping the results close to the vest, and we may not know until the meeting starts at 4 o'clock. Remember, this pay package, it's actually set up as a series of tranches where Elon Musk would be paid and awarded Tesla shares if he hits certain metrics. We are not going to go through the entire thing. But if he were to be successful across the board over the next 10 years, he would have to hit an $8.5 trillion market cap for Tesla, deliver 20 million Teslas, deploy 1 million robotaxis, and also deploy 1 million humanoid robots. The robots is what's most interesting to a lot of people relative to this vote, because Elon Musk, he started during the company's financial calls by saying, I want some influence over what happens with these robots. If I'm going to stick around, I'm going to have some say in terms of the future of the development of these robots. I'm not just going to do this and then walk out the door. In fact, he said, I don't feel comfortable building that robot army if I don't have at least influence over it. He believes he should stay, and he should have a greater influence over Tesla, potentially up to a 25% stake in the ownership of the company. Right now, he's at 15%. Here's who's already come out publicly and said, we're voting for it or we're voting against it. The voting for it is not a surprise. You've got Elon Musk as well as you've got ARK Invest, Ron.
All right, let's see. So Charles Schwab, Barron Capital, obviously Ron Barron is supporting it. Obviously, Kathy Wood is supporting it. Opposing, is there any big players here? Not really. All right, so I got a rough take on this, all right? I don't think that ARK, Schwab, or a lot of these companies should be allowed to vote. Here's why. Let me rephrase that. They should only be allowed to vote shares they actually own. And I know the semantics about it, why they're allowed to. But the reality is, any of these companies, Vanguard, BlackRock, when we're buying shares of an ETF, we're not actually buying the direct shares. We're buying into the separate entity that is then using that capital to buy the shares, et cetera, et cetera. I get it. Trust me, I get it. But at the same time, without that capital, they wouldn't actually own those shares. I think that shares that are held in ETFs, closed-end funds, should not be allowed. They should not be allowed to be voted. I just think it should be a wash. It's just too much power in these companies that actually only own the shares because of everybody that's buying their freaking ETFs. So that's my little rant on that.
Barron, the usual, hey, Elon can do no wrong crowd is 100% behind this pay package. Those opposing, a number of the pension funds have said this is just too excessive. We know about ISS, Glass Lewis. They've also made it clear that they do not believe that this pay package should be approved. As you take a look at shares of Tesla over the last year, keep in mind there's a couple other things that are on the ballot today. One is establishing political neutrality for the company. And two, whether Tesla will make an investment in XAI. That's probably the most interesting vote of the day, because I think
why Tesla is not a seed round investor in XAI or SpaceX or Neuralink doesn't make sense to me. I do believe that, Tesla should be a holding company as well as a regular company where it has investments in these other companies with Musk. I mean, that would be freaking great for shareholders. So who knows?
Guys, when you look at what's happening with Tesla, Elon Musk had made it clear. It's AI, it's autonomous, it's robotics. That's the future. It's not electric vehicles. They are a conduit to advancing those other causes, but it's those three that we talked about in terms of what he believes the future is, and that's where the growth will happen.
Yeah, no, you're right, actually. I'm glad you pointed out the XAI potential investment there as well. And XAI last valued, I'm trying to remember where I last did the story in terms of where they're taking in money. But Phil, as for the vote itself, kind of surprising we haven't gotten any leaks. I guess last time it did leak, and they were perhaps upset about that. It's going to be Vanguard and BlackRock that certainly make the key decision here, I guess. It seems hard to imagine, though. I don't know. Do you have any betting going in?
I think it passes, David. That's just my sense. Look, as much as there are people who are not crazy about the excessive amount of this package, if it's all in, people also sit there and say, look, you hire a CEO to advance your company and grow your company. When the package was passed in 2018, let's see if we can call up a chart from January of 2018 of Tesla. Take a look at what happened. When they had that first package, David, you and I were on the air talking about this, and more than a few people said, oh, come on, there's no way he's going to hit all of these targets. He hit them. And look at what happened with shares of Tesla. You are rewarded if he meets the metrics that are laid out.
Yeah. Phil, do you think there's going to be a backdrop of credits and subsidies and support policy-wise for humanoid robots the way we saw for EVs?
That would be interesting. I don't think so. But look, I mean, there's a lot of things that I didn't think we would see in this country in terms of policies, a few years ago that are now what we now have accepted. So I don't think so, Carl. I would be surprised. But, it's so early in terms of the development of these robots.
By the way, David, you reported a month ago XAI $200 billion valuation.
Oh, it's $200 billion, right? Thank
I checked
you for
your
reminding
story.
me. I just want to make it moves around a lot, but yes, around $200 billion for.
Tesla holding its annual meeting today. We are awaiting results.
All right, so give me one sec. All right, so I do think that Tesla is going to vote yes. And who's to say, other than Tesla shareholders, if he should or shouldn't get the pay package? Tesla shareholders are the owners of the company. And you listen, the comments in this chat group, in Amit's chat group, in Tanner's chat group are freaking amazing. You guys crack me up all the time. Thank you so much. Absolutely crack me up. I swear to God. You guys are great. So is it excessive to the outside world? Maybe. But if the shareholders vote yes, they vote yes. And think about it. At the end of the day, if you vote yes, and if somehow Elon gets this market cap to $8.5 trillion. Is it not worth it for him to get that reward? Think about how much money he makes everybody. So I think it's going to be fine. You know what I mean? No, I did not get a work from home deal. I took the day off, but I'm still working my regular job right now, even on a day off, because there's stuff that has to be done. Yeah, I think Tesla's going to do very well. QXO down a little bit. The earnings are not out yet. I thought they were going to be out midday. So we'll see what happens. I'm actively watching to see what they say because QXO is one of the companies I am really interested in. I want to see what Kramer says about Apple because I'm going to go into why what happened today I don't think really matters for these companies or the S&P at this point.
It's time for Jim and Stop Trading.
Well, I think this Apple Google deal is going to happen, the $1 billion deal. It's very funny because how many people felt that Siri was way behind. Well, you know, they advanced that just gets taken off the table if that's the case. Now, the stock is down. I don't know if people feel that maybe that Google should be paying them. But this is a perfect deal. And I think that the age of Siri being impersonal and not really getting the message is over. This will be terrific. I still think the Gemini comes in and they just become the native form of this. I love this combination, and I think that people have to stop complaining about Apple being behind.
Yeah.
They'll be fine.
A lot of chatter about what new features we might get in
I
the
think
coming
it's
year.
so exciting. I think Apple is the price earnings multiple is too low. Now, by the way, the Skyworks Solutions deal with Corvo, people were talking about how business is not going to be that good with the largest customer. You know, it's slowing down. I'm not getting that after I speak with Skyworks yesterday. That's a good deal, Dave. You ought to check that deal out.
Okay.
All right.
Yeah, we talked about it yesterday.
Well, all right.
When you were in Boston, but now you're home.
I'm home.
What are you going to do tonight?
I don't know. I had a good trip last night.
Freaking Kramer. You know, he's right a lot of times. He really is. I mean, how many times did he say stop trading Apple or stop trading NVIDIA? Think about where Apple was and where it is now. I mean, I'm going to pull up Webull. I got to tell you, Chris got me on this. I'm kind of liking it, even though I don't use them. You know, somebody had asked about Robinhood. I don't think Hood is getting that crazy. I mean, think about it. Over the past month, Hood was down to 122. It's not even at its 1 month lows. So sure, is it down 7% today? 8%? Yes. Is it something to get crazy about? I don't think so. I mean, look at Hood over the past 6 months. And this is more mentality about long-term versus short-term. Should we get crazy over a stock that's up from $48 6 months ago to $131? Stocks don't just go up. I think today is just short-term volatility, even with Palantir. Palantir was at 108 6 months ago. And it's at 178. It's hard to really get upset at that. Sure. Look, I think most of you know where I stand on this. The fact that they put up a 63% year-over-year quarter on revenue growth and couldn't blow past 210 and couldn't keep that momentum, regardless of the market being down today because of the jobs report, signals to me that the valuation has to catch up to the business fundamentals. The business is operating on all cylinders. It's an amazing company, but I think that it's going to go sideways for a little bit. I think it's going to trade within a range. I don't know that you see sub 150 here. I mean, it hasn't been there since the middle of July. So let's see. I think it's going to trade between 150 and 200 for a while, and it's going to take a couple of quarters to regain this momentum. And there's nothing wrong with that. This is a company that has just been on a tear. There's absolutely nothing wrong with that at all. I think that it's going to be fine. And ultimately, what's going on today? I mean, look, Meta, this is just crazy. I'm very shocked that Meta is down 130 points since earnings. But ultimately, does what happened today impact the big five going higher in the long term? I don't think so. I don't think a weak jobs report is something for Meta or Alphabet or Amazon to get sold off on. And I think this is going to create a long-term opportunity. Short-term money, day traders who are playing volatility on earnings, they're probably going to feel some pain. But as a long-term investor, I don't get crazy about this. Now, Meta, I don't like when algos take control of the stock. And that's what I believe happened. Look, when Meta released their earnings, what happened? The algos took control of it. It started selling off. And then most likely stop losses were triggered and it kept falling. This happened in a matter of a minute, if not seconds. People didn't have time to read the press release. The earnings call hadn't even started. Susan Lee, their CFO, specifically said that their one-time tax charge is a one-time tax charge that impacted earnings. The headline news was that they generated $5.66 loss on what the street was projecting. They only came in with $1 something of EPS. On a normalized ratio, it was over $7 of EPS that was generated. So when the CFO says that this is going to be accretive and help earnings in Q4 and going forward, it's a one-time tax charge. This has nothing to do about the company's metrics. I mean, this is something that I want to show everybody. And where I also think that people just don't do not so much that people don't do the research, but it's hard to take algos seriously and short-term investing seriously when this is what the numbers actually look like. So Meta, I need to put this on a quarterly view. Their cash from operations, quarter over quarter, grew by $4.4 billion. First time they reached $30 billion in cash from operations in the 3-month period. Their CapEx only increased by $2.3 billion on a quarter over quarter basis. So they're actually generating more cash from operations on a quarter over quarter basis than what they are expanding CapEx by, which causes the free cash flow to increase on a quarter over quarter basis, even though they're spending more on CapEx. So I think that the algos got it wrong. I think that the street got it wrong. And I think that this is going to ultimately be a buying opportunity. Meta is now trading at under 19 times 2027 earnings. To me, that's inexpensive when Walmart and Costco are both trading over 30 times. So I'm just not worried about Meta at all. And if it keeps going down, I have a very low cost per share basis. I would consider adding if it keeps going. I don't know what it's going to do. I don't have a crystal ball, but over the next couple of years, I don't see Meta being this size. I see them getting bigger and bigger because when you look at their revenue, it continues to grow. Their gross profit continues to grow. Operating income continues to grow. I mean, think about it. First quarter, over $20 billion in operating income. This company is just getting bigger. So I'm really not that worried about it. So I don't know. I don't know at all. It's really interesting. And now the tide's starting to change. Look at this. NASDAQ down 310, Dow Jones down 278. I mean, the Dow was down at its worst point 46.8. So we rebounded 200 points. So let's see what happens. Let's see what happens. I mean, days like this, people should not freak out unless you're a day trader. long-term investors, look, if you're putting into an S&P index fund, are you really worried about today? No, you're hoping that the 15th comes sooner than later so you get to buy more shares at these levels. I mean, look at NVIDIA. NVIDIA is at 189. A lot of people didn't think NVIDIA was even going to hit 185 this year. So it is what it is. Let's see what happens. If the government gets a deal done and the shutdown ends, things could get better. I mean, do we really think the Fed's not cutting in December? I think they are. I don't know. I think that everybody just needs to take a step back and take a look at what's going on, because at the end of the day, this is something that long-term could be a very good buying opportunity for a lot of people. Let's see what's going on. Okay, some people are anticipating more layoffs. Oh boy, Barclays. Is this from Barclays? No, it's not. Elon deserves new pay package if Tesla's market cap reaches $8 trillion. Yeah, from Barclays. Exactly what I said. Now, I don't know if he's going to hit $8 trillion. I mean, $8 trillion is a crazy number compared to the valuation that they're at, but who knows? And think about it. Anything that happened today, does this change the fact that there's a 700 billion backlog with Amazon, Alphabet, and Microsoft in cloud? And where does that money go? As they expand their data centers, it goes to NVIDIA. All roads lead back to NVIDIA. I'm just not in the camp that this is a long-term scenario that is going to cripple the market. So let's see. I want to bring this up. I want to hear what the guy from Barclays has to say.
Our next guest says that today's shareholder meeting will be critical in another way. It will remind investors of the growth opportunities ahead for the stock, like we just said. So joining me now is Dan Levy, the senior research analyst over at Barclays, covers Tesla. Dan, the conversation with Phil, he talked about some of the lofty goals that are out there. Is this a scenario where Tesla, if it does reach those goals, is a company that should be paying Elon Musk $1 trillion or near that amount in compensation?
Hi, Dom. Thanks for having me. Yeah, look, I think what we've generally said is if Tesla can achieve an $8 trillion valuation, which is roughly the upper end of the market cap milestones, Elon deserves that type of compensation for what they're generating. And specifically, it's not just the operational milestones of the 1 million bots or 1 million robotaxis that are being deployed or the vehicles sold. Really, it's also the profitability metrics that the last 3 profitability milestones are $400 billion of EBITDA in a 12-month period. That's really unprecedented. So to achieve that, obviously, if they can do that, the company will be worth a lot more.
What exactly is going to be, from a research analyst's perspective, going to be the most important part of that value-added drive to reach the hypothetical $8 to $9 trillion market cap mark? Is it going to be in electric vehicles? Is it going to be in robots? Is it going to be in autonomous driving and robo-taxis? What's going to be the primary driver, in your opinion, of a potential hypothetical $8.5 trillion value?
I think they've laid it out pretty clearly. The future growth of this company is not automotive. Auto is one element of the milestones, and it is obviously the driver of all of the earnings today. But the future growth, they've been pretty clear, is driven by physical AI, right? And so it's that application of AI, and whether it's in bots or whether it's in autonomous applications, be it robo-taxi or consumer applications of autonomous, they're clearly sending you the message that that's where it is. There very well may be other end markets they can pursue that are adjacent, but it's an AI push.
All right, Dan, one last question before we let you go. You have a hold equivalent rating on these shares right now. What would happen, or what would need to happen for you as an analyst to say this is a buy equivalent?
Yeah, I think, the hold rating does reflect the fact that from a current fundamental standpoint, the stock is obviously quite full. Earnings today are being fully driven by the automotive business. We do have earnings that are roughly flat next year. We do see negative earnings revisions ahead, but we're also mindful that the automotive piece is increasingly being de-emphasized by the market and really is about the growth aspects ahead. Look, the growth elements that they have ahead, they're very ambitious, and we need to see more on how that growth actually plays out.
Look, I think he deserves it. We'll see what happens, but I don't know. Tesla's valuation to me hasn't made sense for a long time. I think that they need to expand into other verticals quicker than later, and I think the main vertical continues to be Optimus. But now, if he doesn't get it, that's going to be really interesting. But I don't think that this is a scenario where that happens. I mean, he's likely going to get it. And also, what? Look at SoFi. So you can disagree with the valuation of SoFi, but down 6% today. If rates fall, that would theoretically increase its net income margin and potentially increase profitability on their loans or on the spread, because they will be paying out a lower percentage point on the deposits, and the fixed rate on all the loans that they've made so far stays the same. So their NIM would actually expand. So that would actually be bullish. So I don't understand why SoFi is getting hit today with the rest of the market, unless people are just deciding to take profits. But that's not me. I'm not taking profits here. I mean, that never made sense to me. Oh, okay, take profits so I can pay taxes on it and then buy back in 30 days. I'm not a day trader. So that mentality just doesn't work with me. Yeah, I mean, I'm not seeing a lot. I'm really not. There's not enough data to make me get crazy over the economy right now. And I do think that these are one-off things. So we'll see. Nvidia's back over 190 now, starting to come back. This is also why diversification is huge. Obviously, people who piled in to stocks that are just down 8 to 10% versus being diversified are feeling it a little more. I think it's all position sizing, and I think it's diversification, and also what your duration of investment time is. But I'll say it, I don't care. I don't care about one red day. I don't care about 2 red days. I am a long-term investor, and the thesis on the things that I've invested in my mind, still hold up. And for that reason, I can sit here and be very calm. And while it is not fun seeing a lower number on the screen, it's part of investing. Investing doesn't go straight up. It never has and never will. So I think that this is just a scenario that everybody needs to take a step back, just relax, and think about why you invested in these companies anyway. Is your thesis broken on Palantir? Is your thesis broken on SoFi or Hood? Just because the market's down and just because the jobs report came in worse than expected, is that a reason to get out of things or get crazy and see Meta go to 624? I mean, look, we were at 730, 740 2 weeks ago. I mean, that's a big drop on earnings and then just getting caught up with the market. But is the thesis on Meta broken? I mean, look, Zuckerberg, in my opinion, has earned the right to spend. So as a long-term shareholder, I'm not getting crazy on Meta. It doesn't matter to me. I'm interested in what Q4 earnings are. I'm interested in what the forecast for 2026 are. I'm interested in where we go from here. And nothing that's happening today stops the money from flowing into semis in memory companies. It doesn't stop the AI revolution. It just doesn't stop any of it. So we'll see. That's why guys like Warren Buffett stay calm and cool, because when everybody sells everything and things get cheaper, they come in and buy. And I never understood why people, if you loved Hood, and I'm not a shareholder of Hood, but if you loved Hood at 140, 145, thinking it was just going to keep going up, down 7% today, 8% today, why wouldn't you love it today? They just had a phenomenal earnings report. SoFi being down, why wouldn't you love it today? So BMNR, why wouldn't you love it today? Is the thesis on Ethereum broken? To me, it's not. So we'll see. I want to read some of these comments. So hold on a sec. So let's start with this one. Steve, that is on CNBC, saying job data at a 20-year high. With all the companies announced layoff that go higher, shares go up. And that looks like a slow, but didn't use those exact words. Look, let's see. My big fear is that unemployment gets out of control due to AI and robotics. Let's see if this is a step in that direction. I do think we need Fed cuts and get down to 2.5% to 3%, so we can incentivize businesses to expand and incentivize entrepreneurship. Because I do think that there is going to be a shift in work, but we'll see. Chef Mike, thank you so much. Truly appreciate it. No, I don't believe this one bit. I don't believe you're eating Salisbury steaks instead of a ribeye. I don't believe it at all. I think you're at 130 temp on the ribeye and relaxing. Look, can BM&R go under 30? Yeah, sure. It can go under 30. Is it likely? I don't know. Ethereum is still up a bunch, even though it's retraced from 4,700. Keep in mind, in April, Ethereum was at 1,500. So once again, is the long-term thesis broken? That's the big thing. And then, all right, margin got me. That's another comment. If you're on margin, it's a completely different game. I don't use margin. I'm not going to talk about if you should or shouldn't. Everybody needs to make their own decisions, but that's another thing. Days like this stop people out of positions, but that's short-term money. So take it with a grain of salt. Powell will take care of the cut. And we'll see. There was a hawkish cut this time. I think that they have to keep going. I really do. I think that rates are too high. You have to unlock the housing market, and you have to make it where businesses are incentivized to grow and expand, especially in a world where they took debt out at such low levels. You can't have a situation where when they need to refi, it is drastically different and changes their whole profitability model. You just can't do that. It's not good for business. It's not good for the economy ultimately, because we want as many jobs as possible out there. Let's see. I don't really follow Novo or Lilly. Yeah, look, I get it. If your averages are high and your stocks are down, it's tough to look at, but ask yourself if the thesis is broken. That's the biggest thing. Is the thesis broken, and are you diversified? I took the day off from work, so this is how I'm spending my day off from work. Thank you so much for the super chat. I appreciate it. Thank you for enjoying listening to me. Look, we may see a recovery. Let's see where the market's at. S&P, look, the market's starting to come back. The S&P is down 0.6% right now. It's bouncing off the lows. It's in the midpoint right now. So this could reverse. This could continue to reverse tomorrow. And keep in mind, we're still near all-time highs. Think about this, everybody. Like, really think about this. A lot of people didn't think we would be at 6,700 by the end of the year. We're still above it. We're still above it. And let's really think about this. Take the money printer aspect out of it. Is this a scarier environment than the pandemic? Is this a scarier environment than part of the country shutting down? Is this a scarier environment than businesses not being allowed to open? To me, no. So if it's not scarier than that, I think that we need to take everything that's happened today with a grain of salt and just look at the long term. I mean, let's look at SPY. I mean, is this something on a 6-month period that if you take a step back and look at that you're really worried about? How about in a year? How about year to date? You know, is what's happening today worse than what happened in the spring? No. Are we anywhere near where we were in the spring? No, we got down to 493. We're 180 points away from that. This is nothing like it. Every uptrend that we have had, look at that, 591 down to 575, 633 down to about 620, 673 down to 654. I mean, this is normal. This is normal market. This is normal volatility. Sure, is the volatility today a little bit more than usual? Yes, but so what? Long term, this should be okay. And looking at this on a 1 day, we bottomed at 668, and it's coming back. It's not back the whole way, but do we not think that we're going to make all-time highs? I think that we are. I could be wrong, but I think that we are. And look, if you bought NVIDIA back in April or even in January, I mean, where was NVIDIA at the beginning of the year? I mean, NVIDIA was around 140 at the beginning of the year. You're still up 50 points on it. And a lot of people bought into the downtrend in April. So you're still up pretty well. I don't think today is a day to freak out. I think it's a day just to freaking walk back, take a deep breath, and just see what's going on. Steve could tell you that you just lost a limb and you're like, I don't care. I mean, you're still alive, right? Gotta be positive. Gotta be positive. Thank you for the new member, Fritz. Really appreciate it. Really appreciate everybody supporting me on this journey. And Dougie, that's a great point. Look, if you exit a position, you may not be able to get back in at that price for a long time, if ever. I mean, people who exited Palantir, people who exited SoFi, people who exited Hood are probably wishing that they stayed in. I mean, I just look at SoFi. I mean, look at this on a year-to-date basis. It was at 950. I mean, it was at 13 at the beginning of the year, 950 in April. I mean, can we really complain that it's down from 3166 to 28? I don't think that we can. Even if SoFi went to 25 or 23, can we really complain? I mean, I was writing bullish articles about SoFi and Palantir in 2022 when they were both in the single digits. That was a much different time than it is now. So let's see. Let's see what happens. But I think that people need to take a step back and just one of the greatest lines from Bad Boys 2. was woosah. Just relax. Have some milk. Relax. I think that things have a funny way of working themselves out. Yeah, Dougie Dallas, go have a shake today. I'm with you, man. I am with you. And the single digits for SoFi feel like an eternity ago, even though it's like 6 months. Feels like an eternity. Feels like an absolute eternity. And where's Microsoft? Microsoft has had a great year. And these are the companies that drive the market. I mean, look at that. Are we really mad that it's gone from 542 to 500? I mean, I'm not. It's funny. Everybody loves to see the market go up, but the companies, when they go on sale, they don't want to add or start a new position and things are a little bit cheaper. I mean, it's crazy to me. Yeah, look, BMNR, I don't know why people get crazy over BMNR. Look, everybody should know. Give me 1 sec, everybody. So, look, everybody should know that BMNR was going to be volatile. Everybody should know that Ethereum was going to be volatile. Everybody should know that there's no financials. There's no way to really handicap it. It's more a long-term thesis. And if you're not bullish on Ethereum, BMNR is not something that should really interest you. Now, my BMNR thesis is around Ethereum. If Ethereum works, BMNR is going to work. If Ethereum doesn't work, BMNR is going to keep going down. So for me, we need stablecoin adoption and tokenization to take off. And if that happens, BMNR should do well. But at the end of the day, BMNR is a play on Ethereum. And everybody knows how this works. Tom Lee issues equity, buys Ethereum. Ethereum goes down. That's the main asset in BMNR. BMNR is going to go down. So, yeah, I know I'm showing Microsoft. Let me change it to BMNR. And everybody knew that the swings were going to be huge. And we shouldn't look at this on a year or day. Let's look at this for 6 months or so, or 3 months. I mean, those are big swings. BMNR was at 68. It's been here before. It's been at 40 before, and then went back to 60 again. That's true volatility, and everybody knew that this was going to happen. And this is not my typical thing that I invest in, but the Genius Act provided clarity for me around crypto. I am waiting for the next bill to come out, but I am in a position where I believe stablecoin is going to be huge. It's going to create a deflationary environment for Ethereum, which will push the Ethereum price up. BMNR, being the largest holder of Ethereum, will get true network benefits by being a validator. It will be able to stake, it'll be able to restake and restake through DeFi. When the Clarity Act comes, I think this will be a much different situation. And BMNR is a stock that has the potential to do a lot, but it also has the potential to continue to go down. It's very speculative. But if you were bullish at 50 or 55 and you have a cost basis of 55 and you're still bullish, what's wrong with adding a 38 in dollar cost averaging? I have never. Let me say this. Meta is probably the only thing that I've caught at the absolute bottom. Okay. When I started buying SoFi, I bought it all the way down to the single digits. I mean, when I bought Palantir, I started my position in the single digits. I kept adding up to 18 or 20 and then kept buying when it went back down again. I mean, it's very seldom that you catch something at the very, very bottom and you time it perfectly. That's just not normal. So this is also why position sizing is huge, because don't go all in off the jump. That's why I scale in. And that's actually the theory around investing in an S&P 500 fund over the long term. You buy high, you buy low, you buy in the middle, you average out, and over time you allow compounding interest to work its magic. You reinvest and plow the capital from the dividends back in, and you do well. I mean, the M&R could keep going. This trend looks like it wants to keep going lower. Just because you're getting a little candle upward does not mean that the pain's going to stop here. But you have to be okay with the pain. Otherwise, investing in individual equities probably isn't the right thing. If you're not ready for pain and if you're not ready to stomach volatility, then I don't know if the individual equities are a great idea. I mean, for me, I'm able to stomach the pain. I'm very diversified. So we'll see what happens. Yeah, listen, I agree with that. Social media has cooked everybody's patience. Everybody wants instant gratification, and that's not realistic. 2021, I'll never forget, somebody said to me that it's crazy that if you're not doing a 50% return a year, people think you don't know how to invest. That's not normal. The S&P average is 10 to 11% a year. And being in these stocks, which is such huge momentum, is not a normal thing over the long term. Always picking winners is not always reality. So, I think you got to take today with a grain of salt and take a step back. We'll see what happens with BMNR, but I'm not worried. This isn't stopping me out of a position. In fact, I will buy more. I don't have a full position yet, and I'm on the 3 to 5 year train of this. A lot of companies I invest in 5 to 10 years. So trust me, I'm not getting stopped out of this or other ones. Oh, this is interesting. Hold on. We got 2 new videos that I really would like to watch. Let me close out everything else so I don't mess this up. So Google opens access to its most powerful AI chip. And then we have Rick Santelli talking about treasury yields. Let's watch the treasury yield first. I guess there's 3 videos. And we have the final trades in from the halftime report. That one's short. We'll start with that, and then we'll roll into these others. I did it again, rookie mistake. I did it again. I didn't hit the freaking audio.
You're up first.
Yeah, just to wrap the show, I want to be clear here. I don't think that you should be tempted here to go short thinking this is a much larger move. Look at Apple. Apple's higher. The market doesn't want the liquidity. It just wants to work off some of the extreme sentiment and bullishness. Jenny said government shutdown probably coming to an end. I agree. Probably ends by Monday or Tuesday.
Brent.
I love what Terranova said. Look at Apple being up. I mean, I'm not taking today as a signal that we're headed into a 20% retracement. Not happening, my opinion.
RSPH, if you want to play healthcare, I like the equal weight healthcare versus XLV, which has almost 13% in just one stock, Eli Lilly.
Jason?
Palo Alto, I continue to like this pivot that Palo made in acquiring CyberArk. I think that's a great
Jenny.
Western Union is having their investor today as we speak. I'm jealous I'm not there, and they're probably talking about what Bryn mentioned before, which is even they're entering the crypto space in a strategic way.
All right.
Yeah, I mean, Apple, great company, and I think that's a signal that
Rick Santelli's in Chicago.
I think Apple is a signal that the market is not necessarily in the situation that people think or feel that we're in. And I think it's going to be fine in Q4. So let's look at the PIMCO sponsored video on CNBC about the yields.
He is following the bond market and the news. Rick?
Well, I'll tell you what, you just nailed all the important variables. Let's start out with Challenger Gray and Christmas. Consider its layoff announcements, first of all. Will they actually happen? Maybe, but they are the announcements. And if you wanted to make today's number look as bad as possible, here's how you'd say it. The worst October in 22 years. If you wanted to reflect a more accurate way to view today's number, well, 153,000 announced layoffs. February was 275,000. January was 172,000. So the first 2 months of the year were significantly higher. If you look at the response in the marketplace, obviously 2s and 10s both started to drift significantly lower, and that really was the driving force. And you mentioned it, Sully, a lot of people talking about it in terms of 22 years, though. And if you look since the Fed rate cut, what that has done is brought us back to what had been the top of the range, kind of 405 to 410. And you also mentioned 4%. Are we going to get back under it? Here's an October 1st of 10-year. You know how many closes so far in 2025 we've had? All in October, a total of 6. So the real key is, are we going to go back and revisit under 4%, or is this going to hold and we move back up towards 4.25? That's what the game is. That's what investors are trying to decipher. Brian, back to you.
I mean, think about this. Do you really want to be in the treasury market? Like, seriously, unless you need income and you're retired, et cetera, a 4%, getting a 4.11% yield on the 30-year, do you think that you're going to do better over the next 10 years generating a 4.1% return than being in the S&P? I mean, I'd rather be in the S&P. That's just me. So, I don't know. I don't think the bond market thing is anything to really get crazy about. All right, this is what I'm really interested in, that Google's opening up access to its most powerful AI chip. I wonder how this is different than the Amazon Tritium chip and what this is going to mean for NVIDIA, even though probably not much for NVIDIA, but let's see what they say.
Announcing the rollout of its latest in-house AI chip as the tech giant takes aim at NVIDIA. Mackenzie Sagalos has more on the shifting AI race in today's Tech Check. Mac.
Hey, Dom. So Google is opening access to its most powerful AI chip yet, part of a much bigger play to challenge NVIDIA and close the gap with cloud rivals Amazon and Microsoft. So Alphabet, it has spent 10 years building this chip called Ironwood. It was introduced back in April, but now it is going to be available for mass sale. Now, this matters because chips are becoming the deciding factor in who gains ground in the cloud wars. While most AI models still run on NVIDIA GPUs, Google's hardware undercuts them on price. Amazon and Microsoft, they do both have their own in-house AI chips. Even OpenAI is paying Broadcom $10 billion to design one of their own. But Google's TPUs are already running two of the most important models out there, its very own Gemini and Claude, and that is helping Alphabet win major cloud contracts with names like OpenAI, Meta, and Anthropic. Bernstein's Stacey Rasgon says Google is the only hyperscaler really deploying custom AI chips at massive scale, adding that rivals are still years and billions behind. CEO Sundar Pichai credits TPUs specifically for driving massive upside in its cloud business, which is why they are doubling down. Google's CapEx spend now on track to hit $93 billion this year, a lot of that on chips, with even more spending coming in 2026, Dom.
All right, so speaking of NVIDIA, Mac, Jensen Huang is actually now walking back some comments he made to the Financial Times, claiming that China is going to win the AI race. How exactly does that play out right now?
So we saw this about face. So the company put out a statement on social media soon after that, notably softer than his claim that China was going to win the AI race. And this comes at a time that NVIDIA is really taking it from all sides. Their H20 chip, it is still stuck in approval limbo for an export license. So he's wrangling with the U.S. government on that. And then both NVIDIA and AMD are up against tougher restrictions from Beijing. You've got Reuters reporting that China's forcing state-backed data centers to use domestic AI chips. In some cases, they're being forced to tear out foreign hardware, according to Reuters reporting. You've also got Beijing conducting a national security review of NVIDIA's chips. So at this point, Jensen Huang, their CEO, is saying that their China market share is down to 0. And then last month, there was all this hope around those bilateral talks between President Trump and Xi Jinping in South Korea that maybe we'd get some progress on chip policy, and that hasn't happened. So I think that NVIDIA very much feeling like this negotiating tactic in a larger trade war.
I don't think that we really learned much from that, did we? I don't think we really learned much from that. It's going to be interesting to see what happens with, what's this from 8 minutes ago? Supreme Court ruling tariffs illegal would be positive for equities, says Deutsche Bank. What? How would that be? I'm sorry, I'll get back to Alphabet. This is, I really want to see what the hell they're talking about with this.
Talk more about that and a lot more, and what the potential fallout might be for rates and the state of the market and economy. Pinkham Chadha is Chief Global Strategist at Deutsche Bank, and Peter Bookbar, Chief Investment Officer at One Point BFG Wealth Partners. Peter and Becky, good to see you both on set. First off, very quickly, Becky, have you and your team done anything on the tariffs and what may or may not happen to the stock market if the Supreme Court does rule they're illegal?
I think it would be positive, basically, for equities in the short term, or very short term, I should say. And I would say we're sort of already in that phase. There's going to be a lot of whipsawing because, I mean, if you think about, one part of the companies that are impacted massively by the tariffs, that's the consumer companies. The consumer companies haven't actually recovered from the pandemic yet and the issues that it created. So this is one additional place. So all I'm saying is market was short and underweight. Market got even more short and underweight, basically, because that's where the tariffs hit. And so, when you have the potential of them going away, it's going to cause some whipsawing. So we've had some.
Aren't you worried, though, that bond yields will spike? Because this is going to be a critical source of revenue for the government that would then be cut off?
So I think that bond yields should be closer to 4.5% right now, the 10-year at least, anyway. So I think they're kind of on the low side. And I would say in terms of the tariffs, what we're concerned about is the deficit and the funding. But if you think about the headline tariff number that is raised, to the extent that U.S. companies are paying that, that's 21 percentage points of that is offset by, it's a cost, or a tax that's already paid. So, it's sort of subtracts from the corporate tax that you have to pay. So I think that the tariff numbers, are, the contribution to the budget is overstated by just looking at the tariff revenue.
Okay.
That's all
I just wonder, Peter, and I worry, is it an underappreciated risk? And maybe Binky's right. I don't know what's going to happen, and that's the point. We've been talking about this for the better part of a year, and maybe the Supreme Court just comes out in a couple of weeks and says, you know what, they're illegal, bye. And all of a sudden, everything changes.
Well, if a tariff is a tax increase, then the lack of a tariff is going to be a tax cut. So from that perspective, it's going to be a positive. But Trump has plenty of sections that he can utilize to replace a bunch of those tariffs. And they call it the $300 billion of revenue. Well, relative to the $7 trillion that the government spends, it wasn't going to move the needle that much. And because of all the other sections and all the other tariffs that'll probably stay on, the government will still take in money. The offset of that is if the tariffs lead to slower corporate profits, that is less corporate taxes that are paid.
Yeah.
If it leads to less hiring, that means less income taxes paid. So we can't just look at, okay, we have tariffs, we have revenue coming into the government, and that in isolation. There are plenty of offsets here.
Yeah, and the president will have a backup plan, and some of himself and some of his proxies have said we've got other ideas. I don't know if the tariffs are good or bad. My point is that it's a huge variable that we've been talking about for 10 or 11 months that would soon just be wiped out, all because of the Supreme Court. And by the way, in arguments, apparently they expressed a lot of skepticism, including Chief Justice Roberts, not exactly on board with the tariff idea. So it seems like they will be ruled illegal, but neither of you, Peter, you don't sound that worried about it.
I was not a fan of tariffs, particularly the negative impact on small, medium-sized businesses that have much less ability to handle it. So taking those tariffs off for these businesses, I think would be a positive.
Okay, Binky, we don't have official government data. We know that. We do have the Challenger Gray and Crispus job numbers today. They showed the biggest drop, most layoffs in October in 20 years. It's 1 month, it's one data point, it's one company's own data. And ADP, by the way, the other day was actually a little stronger than expected. How are you and your team reading the American economy and job market right now?
I think the job market's been slowing for quite a while. We obviously have all the issues of the actual measurement and the revision, so we don't really know what the numbers were. Lots of reasons to believe that, we slowed a while ago. If anything, some high-frequency indicators, ADP included, are actually saying that we are past the worst and things are actually getting closer to, slightly positive now that we've actually been negative.
I think we need more data on this. I don't know that this would be positive or negative. I got to really wrap my brain around that. I mean, I guess if tariffs didn't go through, you have the argument that prices would come down a little bit on the input side, margins would expand. So we'll see. I think that that'll be interesting. I'm going to take some questions and call it in a little bit. So just start firing things off. I'm not a fan of DraftKings right now. So that's just me. I think that the new bill is not great for them. So they need to figure out the whole 90% being deducted from wins. If Amit wants me to come on, I will come on. 100% up to him. 100% up to him. Yeah, QXO, refreshing my screen on. We don't have any news yet. It's sliding. QXO is something I'm really interested in. It's a 3 to 5 year time horizon for me. So we'll see. We know that they're reporting today. I want to see the earnings call. All right. Guys, I got a call. I got to take care of something. I will be on tonight with Amit at 9:30, and I may be on the market close. Thank you for joining me. I truly appreciate it. Have a great afternoon, everybody. I'll see you tonight.